All right, guys, welcome to the Spartan Charts. Let's see if we can fix the audio here. I think that should be all right. Maybe a little bit more. All right, that's good. Well, this is going to be our podcast series for YouTube and Rumble. And, if this podcast series decides to move on from being me talking about random things, then I think that's a good sign. We can take it somewhere else. But I just want to take this series and this podcast and talk about some of the things that are going on in the markets today and in the economy and macro. I'll kind of be referencing everything in this podcast, talking about, the effect on politics of, the effect on the markets of politics, of geopolitics, of macroeconomics, of all these other various things that are happening in the world today that I think everybody needs to be aware of. And I know you can find it everywhere. You can always find a podcast of somebody talking about something and someone mentioning something about something and talking about someone. There's all of that. But, might as well throw my 2 cents in there because why not? I guess is the best way to describe it. Don't know if you can hear that. That's my dog in the back. Tearing up my carpet. Lovely. So, I want to get started out real quick with some of the market news. Right now we're seeing the S&P hit an all-time high of 3,900. The S&P continues to rally. Dow, I believe, is on the same warpath into 31,200 in the Sunday session, pulling back a little bit, but it is reaching new all-time highs. The NASDAQ is also reaching a new all-time high at 13,687. We're slightly below there now, but very close. Russell, same thing with the Russell. Russell's at 2,246.6, completely beasting off the lows, about 200 points off the lows. Absolute monster of a move. And that's kind of where the indexes are. We're seeing silver around 27. It's about flat in the Sunday session. Oil is rallying to 57.5 a barrel. Oil future contracts are about 57.5. Gold lagging hard, down 2 points to 1811, barely above that 18,000 point. So let's kind of go through why everything is where it is. We're seeing a move in the dollar, obviously being bearish for gold and silver as the dollar stands above 91 currently. Yields are rising. Given the equities are rising at the same time, the dichotomy between yields at 1170 and equities hitting all-time highs and the dollar continuing its bounce over the 200-day and bonds continuing to sell off. It's all sort of a strange world we're living in, I guess you could say. But yeah, let's talk a little bit about what's happening. So let's take a step back. The start of 2020 and the end of 2019, obviously a very strange time period. A lot of uncertainty. We didn't know what was happening. There was a new virus coming out of Wuhan and scaring everybody around the world. And then it hit Italy, and Italy was in a major panic, and the rest of the world started to panic once Italy started to panic. And then from Italy it went on and on and on and on, and then lockdowns and all these other things, and we'll get into all this stuff in later podcast episodes. But the ramifications of the response is sort of what we're looking at now. Massive fiscal stimulus. You obviously saw that with the dollar hitting a peak at the start of 2020 at around 102. 103 is where the dollar was. We are now at 91. We hit a low of 89. So that was a major, major move for the dollar back down to its historic trend. And the historic trend, you go to the 15-year, the 20-year chart on the dollar, and you can look and draw lines and relative support structures for how the dollar is functioning. And we've got this crazy expansion in the money supply, given the fact the Federal Reserve has tossed in, trillions of dollars of liquidity into the economy, or not into the economy, let me rephrase that, trillions of dollars into the financial market. And the financial economy is the best way to describe it. They increase the bank reserves, the banks lever up positions, portfolios, more of that liquidity trickles into the financial markets, and then, the ramifications of that kind of action is astounding. You have these, scenarios in which zombie companies can be propped up just on sheer liquidity, all because there's just an availability of liquidity and it has to go somewhere. And Quoth the Raven podcast, I listened to this the other day and it sort of inspired me to create my own podcast, but he did a fantastic analogy of how the Federal Reserve has conducted their QE response. They've essentially take this thing of Play-Doh. You put those small little handheld tubs of Play-Doh in your hand, and you start squeezing it. And this is what the Fed is doing. This is sort of they're getting that liquidity. The liquidity they have is in their hand, right? They have this huge pile of liquidity, and they just keep squeezing it and squeezing it. And it could be the problem at hand is the liquidity or whatever you want to say, but the way that this QE program, these multiple QE programs, is essentially the same way of taking Play-Doh, taking your hand and squeezing it, and watching all the Play-Doh. It doesn't just disappear. It spreads out through your fingers, the cracks in your fingers, it comes out all over the place, and it drips and it falls on the floor or whatever. And that's what happens with quantitative easing in this sort of respect, is that you just throw so much liquidity at a problem, and you constrict the entire process by keeping interest rates down. Artificially lowering interest rates, and that liquidity has to go somewhere, and you see that play out very, very in an extreme manner with you see that play out with your GameStops, with your AMCs, with your Teslas, with all these other things. That liquidity is going somewhere. It's going straight into these speculative assets and speculative equities. And some might make the same argument that that's what's happening with the crypto space. That could be what's happening with Bitcoin and all these other, Dogecoin, this theoretical, worthless, garbage digital currency called Dogecoin that's being promoted by, Elon Musk. And there you have your retail buyers and your retail investors in quotation marks. I put retail and Robinhood guys and traders and investors in quotes because they're not really traders and investors. They're young kids and people, and not even young people. There's a few old bags in there that they've got extra money on their in their pockets, and they have no idea what to do with it because their entire country's locked down, or wherever they are it's most likely locked down, and they can't go out and spend their money at a restaurant. They can't go buy drinks. They can't really do much with it, so they just throw it at the market. And a lot of that is fiscal stimulus from the government, because the government keeps saying, and this is one of the things that is surprising to me, because Janet Yellen came out and she ran an interview and was essentially promoting the $1.9 trillion stimulus package. And I also read this Barron's article that said that the stimulus, this 1.9 stimulus, is almost $2 trillion stimulus package, would be very beneficial for the U.S. GDP. Well, how is that the case? How is just throwing money at a problem going to create economic activity? Well, it's just not. You're going to reduce economic activity, because the more that you pay for people to not do anything, the more they're not going to do anything. This is essentially what they're doing here. We're watching the government throw money, and this is what the government does all the time. We're watching the government throw money at a problem, and this is where MMT comes into view, and this is where all the Keynesians, the Keynesian economics, this is the Keynesians' wet dream. What's happening right now is that we have so much debt, such a massive debt problem, insolvency problem, and currency problem for that, and their wet dream is to just throw so much money at it that it'll potentially fix it, in their minds. I think, obviously, that it's going to create, and it is creating, a much worse problem that we'll have to deal with later down the road. It's kicking the can down the road. Peter Schiff says this and talks about this a lot, is that what they're doing and what the government and what the Fed are doing is just kicking the can down the road for somebody else to deal with. But back to the point of what Yellen was saying, she was promoting this stimulus package, and what's going to happen with this stimulus package is that a bunch of the tens of millions of Americans who are going to get this stimulus I love saying stimulus package. It's not a stimulus package. It's just money throwing. It's not stimulating anything. The only thing it's stimulating is the stock market. You're not seeing an uptick in economic production or economic efficiency. No, we're seeing jobs barely clamber back. The last jobs report was actually beneath estimates. It was beneath conservative estimates, if I'm not correct in saying. So, what happened to the last few stimulus packages that were passed? They haven't obviously done anything. We're not seeing GDP rally back. The only thing that's keeping GDP down is not the virus. The virus isn't doing anything. The virus is just there, spreading from person to person, sitting around. You're not seeing the virus come in, knock down your door, and, steal your bar license, and then, knock over all your cups and all your bottles and things like that and run off, and now you're bankrupt. No. The virus is a virus. It's, it's this invisible little, bacteria, whatever you want to call it, just floating around, getting into someone, getting out of them, and doing their own thing. What's killing companies and what's killing business and killing the economy is government mandated lockdowns. What's happening in Sweden is a very interesting example. The people and they're holding a referendum on the government to say, we strip you of your power to install lockdowns in our country. They're holding a referendum to strip the government of the power to hold a lockdown. And that's a beautiful thing. And I hope that passes, and I hope that sets an example for the rest of the world, where you can't just have these government entities that restrict your rights because they're afraid. What if you're not afraid? What if you're not scared of this virus? What if you understand the science of this virus? I'm 20 years old. I have zero risk of getting injured by this thing. At worst, it'll be a bad flu for me. At worst. I could possibly have even had it at this point. And I probably don't know, because I take care of myself. I work out, I take my vitamin C, my vitamin D3, my vitamin B, iron, zinc. I take all of these things. I've been taking them for months. My body is ready to go. My body is rallied up. So I could have had this thing plenty of times, and I don't think I'd ever notice. Is that really worth locking down 300 some odd million people and not allowing the economy to produce anything? No. We can get into COVID at some other discussion, and, I'm sure YouTube is going to strike down this video immediately. They're definitely going to they're going to slap a COVID label underneath that says reference the CDC, which is ironic. But nevertheless, going to the stimulus, but the point that I was making that I keep getting sidetracked on is that, the stimulus package is going to go out. And it's not going to be put into investing in a bar. If the country's still locked down for some reason, which is completely anti-science, locking down something that's already passed, whatever, you're just going to cause more people to throw their money into the stock market, which is going to be, equivalent of more volatility. It's going to create, an expansion and an acceleration in the wealth gap. The wealth gap this year has been, and last year has been, astronomical. Elon Musk made $100 billion last year, while most Americans lost money. Inflation, they say it's under 2%. I have a strong belief that it's above 2%. Far above 2%. Just look at the expansion in the money supply. There's different kinds of inflation. You can have your fiat inflation, you can have your CPI inflation, you can have your, utilities inflation and your cost of living inflation. There's a bunch of different kinds of inflation, but the biggest one is, the currency that is pegged all things together in our country has expanded. People are not really saving much more. There's not much more to save. Most Americans don't have that much. And you're seeing the wealthiest people and the wealthiest Americans make, an absorbent amount of money. So you're going to have this stimulus package passed. It's going to go straight into the stock market like it has before. You're going to see more craziness going on. The Fed is going to continue to suppress interest rates. They're going to continue to increase, the QE programs with another QE Infinity 2.0, where they double their whatever. I don't know if that's going to happen, but it's not out of the realm of possibility given, how this Federal Reserve has acted so far. And especially given the new government, I'd say it's more likely that we see a QE Infinity Plus now. That's more of a reality than a Volcker-esque type Fed coming in, running quant tightening and then spiking rates to 20% or whatever it was at that point. That would help fix the economy and it would cause a massive recession, but that's we're so far down the path that there's no way we get out of this without feeling some pain. Either a lot of pain now or massive amounts of pain later. That's just how this is going to work. And I think us in the financial markets and the capital markets who can see it coming, we're going to be fine. I'll be okay. I have hedged my bets. I have allocated resources and capital into areas of the economy and of the market that are directly related to the exact scenarios that I see are coming down the pike. In a few years' time, I think we're going to see this play out, if not sooner, if not later. Who knows? But I think at the end of the day, it's inescapable what's happening. And what's happening is a collapse in the dollar. Unless you just have a time period where the Fed is just deleting bank reserves, they immediately delete $5 trillion out of the economy. Like they, just put on a keyboard and said, "Oh, we have an infinite cash card." Came out on 60 Minutes, said, "We have an infinite amount of money. We just add zeros." Until they start taking those zeros out and, letting rates move to where they're naturally supposed to be and acknowledging the fact that they've been wrong on inflation and tighten the balance sheet and, the federal government gets somebody in charge who isn't, full-blown Keynesian economics and MMT prone, who wants UBI and all these other government fiscal stimulus programs that, reduces economic efficiency and economic productivity and increases, what socialism would be. You don't do anything, but you get money for not doing anything. It's essentially what it is. We all get to share in somebody else's prosperity. And that's where we are right now, and that's what's being pushed, and that's kind of how the game is played, especially where we are today. But we have these, the craziest thing is there's no Austrians. I think the Austrian movement is growing, and I think this is the biggest thing, but this goes to show you how inept our government is. When you can take a look at, Peter Schiff after 2008, I believe in 2012, he went in front of Congress, in front of, I believe, the Finance or Banking or something committee, a bunch of, morons essentially asking banking questions that they don't understand themselves. A bunch of non-banking people in Congress asking a bunch of, financial people, or it's not even banking. How about you just say this? You have a bunch of Congress people, you have a bunch of normal people sitting in Congress who have zero understanding of finance, zero understanding of economics, zero understanding of markets, asking professionals, questions. And they're supposed to be, you know, you know, they're supposed to be, harping on them. And this is, and all of it's just, microphoning and peacocking for their base. They don't know what they're talking about. You can clearly see that whenever, the whatever committee has on the CEOs of the Facebook and Google and Microsoft and Twitter, and they're asking them all these different, questions about, security and, tech and all this other garbage and nonsense. And I'm sure these CEOs are just going, oh, good Christ, 7 hours of this? I have to deal with, 12 morons asking me moronic questions that you could Google or Bing. Who cares? And I have to sit here and listen to them drone on. I mean, if I was a massive tech CEO billionaire who was doing some shady shit with my platform, and I got called to Congress, on a virtual meeting or in a real meeting. I don't care. I'd do a real meeting. I think a real meeting would be fantastic. I'd show up drunk as shit. I'd just show up fucked up. I'd come in, completely lucid. I'd have my lawyer next to me. I have no idea what I'm doing, no idea who I'm talking to, but I know it's going to be a shit show and that everybody there is a moron. It's just an absolute moron. They don't know what they're talking about. So I'll just say, I'll reference everything to my lawyer. I'll have my attorney answer my questions. And I'm sure afterwards, all these CEOs, and this is most people who go sit in front of Congress, which is just a dog and pony show for most of them, and that's most of what government is. It's just people in government who got elected for saying things that they never would have or they never are able to complete. Talking about things they don't understand, and then a bunch of Americans who don't understand it either go, oh, they did a good job doing this. Well, okay. Yeah, and that's your government, and that's what you're paying for. So, or not paying for it, that's what, that's who's stealing your money. But, it's ridiculous. I'm at a loss of words for how ridiculous, this government is. And this is most governments. I mean, you take a look at the German government, or even better, the Canadian government. You ever listen to or tune into Canadian Parliament? I mean, some of those guys on there are genuinely, they're smart. They know what they're talking about, but most of them are just sitting up there. They have no clue what's going on. Or the Australian prime ministers, or, I like the British Parliament. It's funny because they just go out and scream at each other for however long. I appreciate that. I wish we had more of that incivility in our own Congress. I think we could use that. Our Congress thinks that, they think that of themselves as very highly and pompous, and no, you're just a bunch of morons who got elected for however many years, and you just say the same thing over and over again. I mean, you're just, you're complete frauds. That's most of what our government is. It's just a bunch of people who are complete frauds who don't know what they're talking about 99% of the time, and they just want to, to appease the majority of Americans who are just complete morons and just want to get completely caught up in the political fights. I like this guy because of this, and your guy sucks, so I'm going to, go protest him because I don't like him. Okay, well, I get your anger, but, directionally, you have no idea what you're doing. And that's, that's most people here, but that's neither here nor there. This should be talking about the economy, but we went on a little tirade about politics because I'm just so fed up with politicians being completely out of their minds moronic 99% of the time, and I can't listen to them anymore. I've tried to listen to some of those hearings, and I'm just, I just sit there, just my brain is going, I'm losing 3 IQ points a second every time I listen to, AOC ask, finance questions to bank CEOs. I mean, good God. If anybody's seen that, my goodness, you just want to rip your hair out. But, no, getting back into, I did want to touch on actually something. I wanted to talk about the move in silver real quick, because I think, there's been a lot of good explainers on what's happened in silver. And, It's strange because silver saw a move from about $25 uh, to about 30 in the future contracts. The future contracts went from about $25 to about $30, about a $5 move, which isn't, it's decent. It's about a 6% increase. But that's, I mean, it's really, it doesn't, this happened, you know, 4 months ago when it ran from, you know, what's this? It ran from about 25, 24 to about 29. And this was about a 22% increase. Back when, what's this one? Yeah, it's made a move like this before. Sorry, I meant to say not 6%. It ran 6 points, but it was from the lows down here. Let's just toss it on the chart to the highs. That was about a 22% move. But this isn't the first time it had a 22% move. It's had that plenty of times before. It was very sharp, but sure. And everybody wants to say, "Oh, it's the gamma squeeze guys. They thought they could, the Wall Street Bets crew could, thought they could come in and gamma squeeze or short squeeze silver, and they'll never be able to do it." It doesn't seem like that's what happened, because what happened was, you know, on a technical basis, if you look at the technicals of silver, it looks like exactly what could have happened, without, the Wall Street Bets or the Reddit crowd. It had a run, about 2 months ago. It ran from about, 24, 23.50 up to 27, 28, and then it came down and then based for, a couple of weeks. And then at the end of the 2 week basing period, it spiked up to 30, which is essentially where the resistance zone is. And it came back down and bounced off the 50-day. Now it's coming back to a trend. I mean, it seems very normal for what silver does. It seems like a very normal thing for silver to do. The chart looks completely normal for silver. It doesn't look like anybody attempted a short squeeze or a gamma squeeze. So I think there's somebody obviously trying to manipulate what's happening with the Reddit crowd. And, they're trying to manipulate. I think, if all those Redditors and all those other guys actually wanted to do that, and actually wanted to drive up the price of silver or something, I think they'd be able to push it a little further than $30. Maybe not sustained, maybe not as sharp of a move, but if it was serious, maybe 34, 35, who knows? But the fact that it moved, it rallied off of a point of strong support into a point of strong resistance, and then it came back down to a point of strong support, just looks like a technical move to me. Doesn't look like any crazy, momentum factor came in, or any of these other things that people want to say it is. And, understanding the future contracts, yes, that's a good thing to do. It's good to understand what future contracts are and how they operate and how the futures market operates. Because you can't squeeze a metal like this. You can buy it, and then over time you can have more net buyers than net sellers, and you can have more demand and then supply, and that drives up the price, and that's naturally how things go up. So, I think we're getting to that point where people are starting to see the value in silver. I've been a long time bull on silver. I've been a bull on silver since about, $18, $17. I've, bought silver. I've added to dips. I've taken calls. I've traded the options on it. I've been all over the place. I love silver. I think it's a fantastic metal. I like silver mining companies. You have your First Majestic Silver that went through a bit of a squeeze, so I got out on that because I don't like the volatility in my mining names. Or you have, Barrick Gold is a good one. You have FSM, SILV. I'll just give you the tickers. I can't remember all the names for all these companies, but there's a bunch of silver mining companies, and maybe I can pull them up here if I have them. Oh, I do. Oh, awesome. There's one Golden Minerals company, which is AUMN, trading at 88 cents per share. You have your FSM, your Fortuna Silver Mines, trading at around $7.60. it did hit a nice peak of about $10, and then came back down. You have your SILV, your Silvercrest Metals Inc. This had also a nice spike up to about 13. Another sort of point of resistance, came back down and is now trading around $10, right on the 200-day. You have your Goro, GORO, Gold Resources Corporation. Has a nice long-term trend. Looks like a nice potential wedge breakout to the upside, trading for about $3. Your XPL, Solitario Zinc Corporation, nice channel pattern, trading for about 74 cents. AG, your First Majestic, went from about $14 to $26, back down to $16. I mean, this one obviously went through that sort of pump and dump. That's what the silver move looked like to me. It looked like a big old pump and dump, and that's why I had some silver contracts. I had some First Majestic contracts, and the second this started to pump up, I just got out of those on the rally. PZG, Paramount Gold Nevada Corporation, PAAS, Pan America Silver Corporation at about $32. MAG Silver Corporation about $18.40. Your PVG, you have Pretium Resources Inc. about $11. SVM, your Silver Core Metal Inc. at around $6.50. LODE Common Stock Mining for about $1.75. It did actually run from about $1.20 to about $4. It had a 4x move, big move in silver, or in common stock mining, back to about $1.75. And then you have your MUX, your McEwen Mining Incorporated, went from about 90 cents to about $1.65, and then back to $1.16. So I mean, I love the miners. They're relatively cheap in my view. I like that the fact that they're fairly cheap. They're easy to attain. Mining companies, you can buy a decent amount of it for fairly cheap. And their balance sheets have they all look pretty well. They look pretty strong. So, I like the miners. I've always liked the miners. You have to do your due diligence with the miners. You have to be able to, know the operating, costs and the cash flow and all this other stuff with the miners, because you never want to get caught with your pants down, trying to buy something that you don't understand. So, take your time, understand what you're buying. It's a fairly important thing to do. And then obviously the reason, we can go into other podcasts on the reason I really like gold and silver, but it ties back into what we started the podcast with. It ties back into the fact that, we're seeing this monetary and fiscal expansion. We're seeing the expansion of US dollars in the global economy. And you obviously have individuals like Santiago Capital. I can't remember his name. This is going to be rankling on me all day now if I can't remember his name. Give me a second, guys. Oh, gosh. I can't even... Really? He doesn't have his name on his Twitter account. Well, his Twitter tag is Santiago AU Fund. So... yeah, check him out. Because he has a theory on the current state of the dollar, and he's talked about this with individuals like Lynn Alden, and he's talked about this on places like Real Vision with Raoul Paul. And he's the sort of creator and leader of the dollar milkshake theory, essentially, where I'll sum it up in the most basic ways that I can, is essentially that the demand for dollars, since the dollar is the global reserve currency, and we've had Kyle Bass talk about 80% of net or 80% of cross-border FX transactions are denominated in US dollars. There's something within that respect, but the demand for the dollars outside of the US is growing. And, you could look at the dollar now at $91, or when it was at 80 something bucks, as, for foreign countries, the dollar is very cheap. And we can buy the dollar very cheap here. We can, pay off dollar debt very cheap here. All these other things. And the demand for the dollar will outweigh, the fall in the price and the deflationary effect of monetary stimulus and fiscal stimulus on the price of the dollar. And I think that's a fairly good analysis, and I think that's fairly reasonable. And I think that's right in some respects. I think, Raoul Pal has this very interesting theory on what happened, and he came out with this months ago when we had this the initial drop back in March, March of 2020, when we had the initial drop. Real Vision's Raoul Pal came out and talked about his sort of phases of this crisis, where he had sort of your primary phase, sort of your liquidation phase, and then you had your hope phase, and then the liquidation phase was the basis trade blowout. When we saw back in March, your equities were falling, your bonds were falling, your safe havens, gold and silver and Bitcoin were all falling at the same time. Your basis trades were blowing out, all the hedges and your flight to safety was all going down. And then after that, that's your liquidation phase, and then comes in the hope phase, or whatever, kind of the second phase that he talks about, where everything rallies at the same time and everything kind of goes up. And obviously we saw bonds return, and they're starting to sell off again now, but you're seeing strength in equities. You're seeing this sort of crazed move in the markets where everything only seems that they can go up. The biggest correction is going to be a 5% correction like we saw last week. And then, you just have, your zombie corporations and your zombie companies getting propped up by liquidity that's being pushed out by the Fed and all this other garbage and all this other nonsense. But then he talks about the insolvency phase. And that's when, this whole speculative euphoria and this whole era of speculative euphoria comes crashing to an end. And that's when you see, the debt problem and the solvency problem and everything start to come to light. And then there's that whole phase of what this is. And I think that's true in a sense, and I think that works well with the dollar milkshake theory. And I think, it could be that event sets off what the insolvency phase would be, because a rapid strengthening of the dollar is always problematic. It never, smells like something good is coming next. But you could have your move higher in the dollar, and then, I think even the Santiago Fund, the guy who runs that, who created this dollar milkshake theory, he said himself that, this isn't the long-term thesis. This is, I believe in his view, I'm not going to speak for him, but I believe he's even stated himself that he thinks the dollar is going to crash itself. But he just thinks there's a phase in between now and then where the dollar goes up, which is very, very possible. And I like to jog that thought around my mind, that there is a potential that the dollar could rally. But inevitably, I think most macro experts and macro guys and all these people, I've listened to Grant Williams and Bill Fleckenstein and Mike Green and Jim Rogers and George Gammon and Peter Schiff and Raoul Pal and your Lynn Alden, your Danielle DiMartino Booth. Who else is out there? There's so many people out there. Kyle Bass is another fantastic one. All these people kind of seem to be on the same page, and they're sort of experts in all their own little fields. So it's fascinating, and we'll have to just see what happens and what comes of it. We're not obviously in the predictions game, but we're in the game of trying to be realistic. Try to look at the world with a sober and objective mindset, which I think has been lost on a lot of people, but nevertheless. So, thank you for tuning in. If you decide to watch this, I'll be posting this tomorrow. It is Sunday around 11:30 at night. I've got a few things to take care of. I got class in the morning, so whatever. But I just wanted to come out with this podcast first and see if it gets a view or two. I don't really care if it gets views or not. I'm going to keep making these just because I like to sort of rant about things and nonsensically talk about things that, make sense in my head, but probably don't over the audio wire. But as always, I appreciate my viewers, my listeners, few and far between. I do love all you guys. And as always, be safe out there.